Recording the meeting, by the way. So it's now 2:01, and thanks everyone for attending. I'm seeing a lot of names. I've been now with it. I'm Mark Manganello, by the way. I'm the administrator of the Office of School Finance. I'm seeing a lot of familiar names. I've now worked with you over the past year, and lots going on with school funding. So that's why we're here to talk about the fiscal year 23 formula. So I'm going to share my screen. I'm going to go over kind of the focus of this training is really to talk about what's going on with SWEPT in 2023. It's a little complicated, so we're going to really be focusing on that. And then after I'm done with a couple slides here, I'm going to get into the Excel adequacy spreadsheet, and we'll just walk through that. And depending on how we're doing with time, I might break for questions. I'm going to go ahead and share my screen. Let's see. Can everyone see the PowerPoint? Can I just get a verbal heads up?
Yep.
Okay, thank you. So the learning objectives here is one of the things to really focus on here is there is a change to SWEPT inadequacy for 23. It's fiscal year 23 only. There is a SWEPT reduction, which is designed to be a tax cut. And we're going to explain how that tax cut works exactly. This SWEPT reduction is net neutral. So if my internet cuts out and you don't understand we don't get to finish this presentation for whatever reason, the SWEPT reduction is net neutral to school funding. It has no impact on school funding. It's net neutral. It interacts with the school funding formula, so that's important to understand. But really, for every SWEPT dollar you see a reduction in being raised, you're going to have that dollar replaced with an adequacy dollar. So that what makes it net neutral. And if it's net neutral and people are paying less SWEPT, it's a tax cut. So that's the big takeaway here is it's net neutral to school funding. It's going to lower people's SWEPT taxes, what they pay for taxes, making it a tax cut. But we're going to talk about that a lot. We're going to go into the mechanics of that exactly. Also important to know, this change in SWEPT is 1 year only. So it's a 1 year reduction in SWEPT under current law. So SWEPT is going to go back to what it usually is in 24, fiscal year 24, under current law. Another confusing thing that I noticed when I sent out the spreadsheet and started talking to BAs is there's two SWEPT numbers on your spreadsheet, kind of. That's confusing. So it's really important that you select the correct SWEPT number when you're plugging in your SWEPT revenue. And we'll talk about that and where there's kind of maybe could be a pitfall for BAs when they're doing their budgeting. Go to the next slide here. So this is some basic stuff. A lot of you know this stuff, but if you're new to government or new to schools, you might not know exactly how taxes work. But I think it's important to talk about the 4 tax rates we have that taxpayers pay. So you've got your municipal tax, your county tax, your local education property tax. We have 4 taxes in total that a typical taxpayer pays. Those 3 are your local taxes, and then SWEPT is unique. SWEPT is the one statewide education property tax. So the first 3 are local, the 4th one, SWEPT, is state. And we know how these local ones work, specifically for schools. You determine as a community how much money you need to raise to appropriate to fund your schools. But you're not going to make your local taxpayers pay for all of it. You're going to see what other revenue sources you have. So if your school district needs $20 million to operate, you're going to see what revenues you have available to you that are not from your local taxpayers. So you're going to see what state revenues you have, and you will have some state revenues. If you might have federal revenues available to you, you might have tuition revenue available to you. So if you tally all that up, say you've got a $20 million in appropriations, maybe you tally up all your revenue, you got $5 million there. Well, then now your local taxpayers need to pay up $15 million to fully fund your schools. And that's how local property taxes work. You take that $50 million, apply it against your local property tax base, you get a property tax rate, the revenue is raised, and the revenue comes into your school district. SWEPT is similar, the statewide education property tax, but it doesn't follow the same formula that these local taxes follow. These local taxes are about funding a particular governmental unit, like a school district. Statewide education property tax is really the state decides how much money they would like to receive through the SWEPT, using it through state law, and they apply that against all state property taxpayers. And the thing with SWEPT is not only is it a state revenue, but it's also a state expenditure, and it's also a local grant. When we spend that SWEPT money, when we send that to the school, when that money transfers from the taxpayers to the school district, it's a grant to the local school district. So it's a revenue source for the local school districts, as you all know. And we're going to talk about how those two interact, how the SWEPT interacts as a grant, but it's also a revenue source for the state, but it's also a grant to the school districts. So that's where these two tax rates intertwine a little bit. So to talk about how we calculate SWEPT for fiscal year 22 and for the past few previous fiscal years, the amount of SWEPT we've raised has been 363 million. So that's a number set in statute. The SWEPT shall raise 363 million. So we take that 363 million and we apply it against the $199 billion tax base of the state. We get a mill rate of $1.82 per thousand. So that's fiscal year 22. What's happening in 23, for 23 only under current law, we are going into a $100 million reduction in SWEPT. So SWEPT will not be raising 363, it will be raising 263, 263 over now a $214 billion tax base because property values have been going up. That's the trend. Turns out to be a mill rate of about $1.23 per thousand. So there's your SWEPT tax cut. If we're raising 100 million less in SWEPT revenue, well, you've got a tinier, smaller tax rate. So you'll be raising less in taxes, in SWEPT taxes. So that's how that tax cut works as far as the calculation goes. But also the tax rate, some of that tax rate is falling naturally because as property values increase, the way that fraction works, of course, smaller fraction. So about 50% of this tax rate is due to that $100 million, so 50 cents, sorry, is due to that $100 million reduction. Some of that reduction between 182 to 123 is due to rising property values. But that is how the SWEPT rate is calculated. So the next thing to think about SWEPT, and this is, I think, tricky for some people, a lot of citizens might struggle with this. SWEPT is both a state revenue and a state expenditure. So as a state revenue, SWEPT is really unique because most state revenue comes into the state treasury, but that's not what's happening with SWEPT. SWEPT is going, it never enters the state bank account. As you know, it goes from your local municipal tax collector straight to your school district. So it never goes into the state bank account, never goes into the treasury. But we book it on our books as a revenue. So when we know that municipal tax collectors are required to assess that tax and send that money to the school district. But since we know that local municipal tax collectors must assess that tax, we record it as a state revenue on our books. And then the next step is when the municipal tax collector sends it to the school district, we record that on our state ledgers as an expenditure. But it's unique in a sense that most state expenditures involve a check being cut from the state. That's not what's happening here. As we all know, it goes from the municipal tax collector to the school district. We record that as a state expenditure. So that's what really makes it a state revenue and a state expenditure, even though the money's never coming into the hands of the state. So that's the kind of uniqueness with SWEPT. It's raised and retained locally. It all stays within the outside of the state, but we do record the financial transactions at the state level. So from what I just described, that's kind of not intuitive necessarily to how people usually think of state taxes. Normally people think of state taxes as coming to the state and then the state spending that money. That's not what's happening with SWEPT. So I think a lot of people have different perspectives on SWEPT. From the state's perspective, it's a state tax. We assess it. We record it on our books. It's in our CAFR. It's in our financial reports as a revenue and expenditure. From the school district's perspective, you're receiving this from your municipal tax collector the same way you receive your local education tax. So it's kind of just money for education. And so I know a lot of districts, and when I've returned a couple DOE 25s this year, where sometimes you record your SWEPT revenue as a local tax. And that's probably because the town, I'm guessing maybe it's because the town probably sends it in a big lump sum, just sends you a big check. And maybe they don't itemize it, and maybe it's a little difficult to itemize, I imagine, to parse out. But we always return those DOE 25s because we say, no, the SWEPT must be recorded as a state revenue. It is under law, under our financial handbook. You have to record that as a state revenue. So Sometimes there's some confusion about, is this really a state tax or not? And from the state's perspective, yes, it is a state tax. You must record it as such. So sometimes there's a difference of perspective between different jurisdictions, obviously. But from the school district's perspective, it's just money coming in to be spent on education. From the property taxpayer's perspective, and I'm sure a lot of you supers and BAs, you deal with property taxpayers and voters, and they want to be, they might have questions about their taxes, and they usually sometimes complain about their total tax rate, and then maybe you have to educate them on the difference between a local education tax and a SWEP tax. But from their perspective, they probably feel like the SWEP and the local education tax are the same thing, because from their perspective, it's just all going to the same place. And that's somewhat of a valid feeling. But as you know, from as school administrators, you have no control over the SWEP. The SWEP is set by the state. You can't change your budget in any way that would impact the SWEP. You can impact your local education taxes through the budgeting process. You cannot impact SWEP. It's a state assessed and dictated tax, really. So that's just kind of where a lot of people maybe get tripped up with SWEP taxes and how SWEP works. There's a lot of other areas where people also get hung up, and we'll talk about that. This is the document we've been using if you've been coming to some of our trainings, DOE's trainings in the summer and fall. This is the document we'll be using to explain the 23 formula. I'll get the Excel spreadsheet up later. But just to go over this really quickly, it's really important to think about excess SWEP towns and non-excess SWEP towns. Excess SWEP towns, previously known as donor towns. There's no such thing as donor towns. That's important to understand, and I'll explain that. But I'm just going to go through the formula kind of quickly just to explain what is an excess SWEP town, what is a non-excess SWEP town. So to determine what kind of town you are, you've got to calculate the cost of an adequate education. So we do how many pupils you have. So say you have 5 pupils, and for each of those pupils, we do multiply by the base rate. So if you have 5 pupils times that base rate of $3,786.66 gets you your base adequacy. Now that those same pupils, you go, are any of those pupils F&R eligible? If they're F&R eligible, we count them here, and then we add $1,893.32 to the cost of an adequate education. Same thing, looking at the same student. Are they SPED eligible? Do they have an IEP? So you've got one student, that's $2,000.37, $2,037.11. Same thing with English language learner. If you have one of those students, $740.87. And then third grade reading is kind of unique, where these are all kind of mutually exclusive. This one is if they are not not FNR, not SPED eligible, not English language learner, and they scored below proficient on the third grade reading test, then when we're calculating an adequate education, we add $740.87. So we're adding up, looking at all your students and all the demographic information about your students, and we're going through this formula to determine the cost of an adequate education. So if we add up all these pupils and we apply all these aid amounts, if we get a number of about $1 million, what that is telling us is the state's definition of what is the cost of providing an adequate education is $1 million. So that means the state must make sure you have at least $1 million to provide that adequate education. So we've calculated at $1 million, but now we're going to look at your community. In each community, every single community pays a SWEP tax. So we're going to look at what are you receiving through your SWEP. If you're receiving $500,000 through your SWEP, then that means you already have $500,000 coming into your community, coming into your school district, but we know you have $1 million. So it looks like the state needs to cut you a check for $500,000 to make sure you have at least $1 million to provide that adequate education. In the scenario I'm describing, where your cost of an adequate education exceeds your SWEP, that is a non-excess SWEP town. That means you need an adequacy grant. These might have been called receiver towns back in the day. I don't know if that was a term. I only hear about donor towns. So what if your cost of an adequate education is $1 million and your SWEP was $2 million? That means you have $2 million SWEP, cost of an adequate education of $1 million. It means you have more than enough money to provide that adequate education according to the state's definition. You have $2 million excess SWEP. That's a term people use. we would call this town an excess swept town, because we wouldn't call it a donor town. Back in the day, they were called donor towns because that excess swept would go to the state, but instead 100% of swept is raised and retained locally. So that district gets to keep that $2 million. Even though the adequacy is only $1 million, they get to keep all of their swept money. There's no such thing as donor towns. There's no donation to the state, but this is an excess swept community. So it's just important to know the difference between an excess swept and a non-excess swept community. And that's a key thing to think about. So now what's happening here with the swept tax cut is, let's talk about the non-excess swept community. If your cost of an adequate education is $1 million and your swept is $500,000, what if there's a tax cut to the swept? And so now your swept is normally $500,000, but it drops down to, let's say, $250,000. Well, we need to provide you at least $1 million to provide an adequate education. So instead of cutting a $500,000 check, the state will cut a $750,000 check. And basically you're getting an additional $250,000 than you would have otherwise. So your community citizens that usually pay, they're paying $250,000 less in swept, but they're getting a check from the state to replace that for $250,000. So that's how it's net neutral to your funding, because no matter what happens, you're getting $1 million in this hypothetical scenario. There's also a provision in the law for, that's how adequacy naturally works. There's also a provision in the budget that says, if we are going to reduce swept, and say that community has a $2 million swept and a cost of an adequate education of $1 million, if we were going to reduce swept, so say in that hypothetical, that community, their swept goes from 2 million down to 1.5 million. Well, now they look like they're only going to raise and retain 1.5 million to fund their schools. So they're going to receive a reduction in funding. But the way the law was written was, no one can lose funding, state funding for their schools due to the swept reduction. So what the state's going to do is pay a $500,000 check to bring you back up to where you were if there was no swept reduction. So that's a swept hold harmless grant, and it's for excess swept communities. And so a lot of questions I've been getting is, some of these excess swept communities have never received an adequacy grant. They've never received a check from the state. So that's something to watch out for. We're going to make sure all of you that are not used to receiving money from the state, will make sure you're notified that you will be receiving money come September 1st, 2022, when this fiscal year 23 formula is in effect. So that's some questions I've gotten from some BAs, is they just want to confirm that they will be receiving an adequacy check because they're not used to receiving it. So that's something to make note of. So another question here is, a lot of people they know that swept revenue is revenue for their school districts. So when they hear reduction, they're concerned about it. They want to know where the money's coming from. So I'll kind of briefly talk that here, and we'll just go through a couple scenarios. But when you think about swept from the state's perspective, it's a revenue source and it's an expenditure. So if you reduce your revenue by 100 million, because you have 100 million less than swept coming in, and you reduce your expenditure by 100 million, that's net neutral to the state. So no impact to the state. But if you're just looking at the local siding, where you're not factoring in adequacy or the HB2 swept hold harmless grant, that would be a $100 million reduction in school funding. So that's, I think a lot of people were concerned about that when they first hear swept reduction. But what happens is, naturally, is adequacy. If your swept is going to reduce, the state still needs to make sure you're funded up to the adequate education amount. So that results in about $84 million in dollars going out. So that's $84 million to school districts. And the swept reduction hold harmless grant, so districts that will be raising less money through their swept. And if they were raising less money through their swept, that's less funding for their schools, so they have to increase local taxes. But the way this law is designed is, they don't have to do that. It is a tax cut. It is net neutral to school funding. They receive about $16 million to fund their schools. So what that means at the end of the day is, the state has just spent $100 million. The state has just spent $100 million, net $100 million. Probably could have done this chart a little bit better. But the net impact to school districts, the local impact, it's net neutral. You have 100 million less in swept coming in, but you've got $100 million more in a check from the state, an adequacy grant from the state. So that's how it's net neutral, but the state has spent $100 million to cut swept property taxpayers' taxes. So I'm just going to go through 3 examples, and we're also going to go through the spreadsheet as well. So we're doing pretty good on time. The non-excess swept community, this is most communities. If we calculate your cost of inadequate education, if it's $22 million is what we calculate, your new swept is only $5 million. Your preliminary grant is $17 million because we need to make sure you have $22 million. But if we look at your old swept was $7 million. So what that means was your old grant was $15 million. Now you're receiving a grant of $17 million. Now people are paying $2 million less in swept. So what does that mean to the school district? Well, the net impact is 0. It's $22 million in funding regardless. But what that means is basically $2 million less in taxes being paid through the swept. So it's a tax cut of $2 million for that community. Running through the cost of inadequate education here, this is for an excess swept school district. Your cost of inadequate education is $2 million. Your new swept rate is $4.5 million. So what do we need to pay you in adequacy? $0, because you have a swept above your cost of inadequate education. But now if I look at your old swept, you're raising $363 million. Under the old swept formula, you were raising $6.5 million. So it looks like now you're only bringing in $4.5 million for your school district. So we're going to pay you an extra $2 million to bring that $4.5 million back to how you funded your schools under the old method, which was $6.5 million, to make sure you don't have a decrease in your school funding, your total education grant. So what does that mean to the school district? Net impact is you receive $6.5 million regardless. What does that mean to the taxpayers? They're paying $2 million less in swept. Now, there's only a couple communities that fall under this scenario, but there's some communities that are previous excess swept districts that become non-excess swept districts, thereby increasing their adequacy grant. But when we also look at their old swept, they're also receiving a loss in revenue there. So they're kind of in between. So in this scenario, cost of inadequate education is $3 million. Their new swept is $2.5 million. Their preliminary grant is $0.5 million because we need to bring them up to their cost of inadequate education. But if we look at their old swept was $3.5 million. So we got to make sure they're up. That's what they were bringing in for their school district as far as adequacy. Adequacy meaning adequacy and swept. That's the total education grant. It was $3.5 million. So we need to make sure they're at least at that level. So we got to pay them an extra $0.5 million there to get them whole, to get them to where they were, the $3.5 million. And so what that means is net impact to the school district, it's $3.5 million regardless. Their funding has not changed. What it means to the taxpayers, well, they received $0.5 million in a preliminary adequacy grant, an adequacy grant, the preliminary adequacy grant, and then they're also receiving $0.5 million in hold harmless grant. So they receive $1 million from the state, which they didn't receive before, and that's to subsidize the reduction in revenue they're collecting in swept. So that's what makes it a $1 million tax cut. So the next question people ask when we're giving these presentations in the summer and fall is, where is this money coming from? So this is a education trust fund pie chart for 2020. This is like audited financials, but I don't have an exact pie chart of what the legislature is predicting for 23. But if we were to build a pie chart of what the legislature, when they were building the state budget, what they're predicting for 23, is they're predicting the swept is going to be a smaller piece of the pie. So instead of being 363 million of the approximately $1 billion that the ETF, the Education Trust Fund, brings in, it's going to be probably more like 28%. So this pie chart's going to decrease, but funding is still going to be around $1 billion. So it's actually going to be over $1 billion. Don't have the numbers right exactly in front of me, but we're going to have around $1 billion in Education Trust Fund revenue still coming in. So as this pie chart decreases, what it means is the legislature is predicting these pie charts to grow. So they expect business enterprise taxes to grow, business profits tax to grow, some of these other taxes to grow as well. So far, the revenues are looking good at the moment. That's what they predict for 2023. So they're paying, essentially, how are they paying for the SWEP tax cut? Well, they're paying through all these other revenue sources in the Education Trust Fund. So we did that pretty quickly, 226. I'll stop, and if anyone has any questions before I go to my next, anyone wants to put something in the chat before I go to the Excel spreadsheet, or you can just comment, speak up. Okay, we got a couple questions here. Mark, can you share this presentation with us? Yes, I can definitely share that slide with you. I can definitely, hopefully everyone was able to see those slides, but I'll definitely share those slides. I can email those out. What is the projection for 24? So there is no fiscal year 24 budget. We only have a budget for 22, 23. So your guess is as good as mine for 24. So we won't know. Yeah, we won't know 20. We won't really know fiscal year 24 until like June 2023. Oh, but sorry. Yes, that's a good question. Yeah, so the SWEP tax cut, sorry, I didn't understand the question exactly. The SWEP tax cut is only for fiscal year 23. So under current law, fiscal year 24, the SWEP will go back to 363 million. So you're going to see a SWEP decrease, and then under current law, you'll see a SWEP increase. That's a good question. Okay, I'm going to share the Excel. Okay, so going through the adequacy spreadsheet, I think a couple things I want to point out, and I know this just we've kind of changed. Hopefully, everyone can see my spreadsheet. It says I'm sharing. Hopefully, everyone. I know we've changed the way the spreadsheet looks. We got rid of the arrow here. We're having conversations. I don't know if we're going to bring. We're probably not going to bring back the arrow. Maybe we should bring something else to flag this column. This column is your adequacy formula. Sorry, your adequacy grant. And then this column, and there's a little space here. This is your adequacy plus swept. And before, I just want to make sure we achieve this learning objective before I forget, is there are two sweps here, kind of. You might see this and think this is your swept. This is not your swept. Your swept is right here. It's labeled swept. So just something to watch out for. Well, I'm going to run through the spreadsheet and run you through it. And I picked 3 towns here.
Hey, Mark, I'm going to interrupt just a second because I got a couple little side messages. Can you zoom in just a little bit? The numbers are very small on the other side.
Oh, yes.
Thank
How's
you.
that?
That's much better. It's still small, but I think that's much more manageable. Sorry.
Any other questions? I think I saw something else go in the chat. Or is that?
It was just me.
Okay. Oh, you sent me the message. So this is the adequacy spreadsheet. So just to go back in time a little bit, for 22, there was a lot of enrollment hold harmlesses in the formula. For 23, there was an F&R modification, but there's no enrollment hold harmless. So that's something to note. Under current law, the enrollment hold harmless only exists in the 22 formula. We're looking at the 23 formula. So we did see a reduction. A lot of communities do have declining enrollments. It's not as dramatic as pre-pandemic to right after the pandemic, but for a lot of communities, students that left during the pandemic have not come back. That's just generally the trend. So that's what we're seeing in the data at the moment. So that's just what the data is telling us at the moment. So this is your base ADM. So for the town of Alton, for the town of Bridgewater, this is what they have for base ADM. This is what we're forecasting out for the 21-22 school year. We do not have the ADM yet. We just have the enrollment numbers. That's not modified. There's no enrollment hold harmless for base ADM. The FNR situation, and I'll just go on a tangent here about FNR. The Department of Education knows districts are struggling to get their FNR numbers up. This is not new. This is something you've been dealing with for a while. And during this pandemic, it's been a real challenge. So the department's position is, we really want you to try your best to bring that FNR numbers up. You have the full year to collect that data. Please try your best. We understand it's feels impossible. It's nearly impossible to get everyone to fill out those forms. Try your best. That data is really important to the state. It's not important. It's important for a data set for us to have. It's important in the other formulas, not just the adequacy formula. So we do want you to try your best to bring your FNR numbers up. But the way the 23 formula works is, and we maybe talked about this in the summer, if you were at some of the presentations we did, we were able to modify the data if the governor authorized us to do so back before November 15th. The governor authorized us to modify the data because there are still USDA waivers in effect. So we did modify the data, but the way the modification of the data works in HB2 that is applicable to fiscal year 23, we look at your pre-pandemic ratio of FNR students to total students. So for the town of Alton, they had 143 students, 617 students, 143 are FNR. So their pre-pandemic ratio was 23%. So if we look at, if we apply that 23% ratio to their current student population, we would get 134 students, FNR students. That's assuming if the pre-pandemic ratio of FNR students held to today's data set. So we calculate that to modify the FNR data, but we're also going to look at what you have in for applications. So for the town of Alton, they have about 117 FNR students. That's what they've received documentation for to date. They can try to bring that number up. It might be hard for them to bring that number over 134. But what we do is we look at this modified FNR number and we look at the currently collected data FNR for FNR, and we choose the greater of the two. So we're going to be choosing the 134 number for the FNR data that will be used in adequacy. So we do 134 times the FNR rate of $1,893.32. But that's how FNR, it's being modified for 23. So it is holding you so you don't have to use the actual FNR data. You can use the pre-pandemic ratio of your FNR data. For the 23 formula, SPED and ELL and third grade reading numbers, we're just using the data that we already had on file for 22. No changes there. And there's no enrollment hold harmless there. I'm going to try to grab the data that's most relevant here. Make this easier to see. So we add up all the base ADM, all the differentiated aid. So English language learner, third grade reading, FNR, SPED, base ADM. We get the cost of your adequate education. So looking at the town, I'm going to start with Londonderry because this is similar to most communities. The cost of an adequate education in Londonderry is estimated to be 16.9 million. Their swept is 5.3 million. So do some quick math. They need a check. At a minimum, looks like the state needs to pay Londonderry 11.6 million in adequacy. But that's just a preliminary calculation. We're also going to do relief aid. Relief aid is a new grant that went into effect in 22, continues to be in effect in 23, and will continue in perpetuity under current law. The relief aid grant is, it looks at your FNR percentage, and we'll look at your FNR percentage assuming using the modified FNR data, which is either the greater than of your modified FNR or your actual FNR. So we're going to be looking at the FNR we used for this community. So it's 12%. It's 482 over 3836 is 12.58%. We pay them if they're under 12%, we don't pay them any relief aid grant. If they're over 12%, we pay, if they're 12% flat, we pay them $150 per pupil. If they're over 48% poverty, FNR, we pay them $600 per pupil. If they're between 12 and 48%, we do the sliding scale grant. So it's about 12 cents per 0.01%. So if you did the math for Londonderry, that would be, it's about a $1.57 per pupil. So a little bit more than that $150 rate. And that's how we calculate FNR, the relief aid grant. So we do 157, that $157 grant times this FNR student base, we get a $75,000. But this grant is prorated to only be 17.5 million. So we calculated for every single district that's eligible, or every community that's eligible. We got 18.8 million total, but the law only allows us to spend 17.5 million on this grant. So we prorated everyone down to slightly down to make sure we got a $17.5 million total. So the town of Londonderry is that preliminary grant was 11.6. Plus, we're going to pay them this right here, the relief aid. So now they're at 11.689 million. That's their preliminary adequacy. Then we're going to look at what they were receiving, that plus their swept, this swept right here. That gets them up to 17 million. So that's their total education grant, which is their preliminary grant plus their swept. That's their total education grant. We're going to look at what their swept was before it got reduced, and what their swept was before it got reduced was $7 million. Their grant, it has no impact. Their grant is a much higher with this new swept rate. So we don't need to hold them harmless because they're not an excess swept town. We don't need to hold them harmless with an excess swept grant, that is. So they get $17 million. They're currently at $17 million. We add their stabilization grant. Their Londonderry happens to be eligible for a stabilization grant. That brings us up to what it turns out to be is $12 million in adequacy plus this $5 million in swept. That brings them up to $18 million total. So that's just sort of how the formula works. You can walk through the spreadsheet for your community to see how it works exactly. I think it's just key here is when you're looking at this column is see what swept it's grabbing here. It's grabbing this swept. Don't look at this swept. Now I'm just going to walk through, just for the sake of time, I'm going to walk through an excess swept community so you can see how that works. So picking Bridgewater, we've got a cost of inadequate education of $388,000. Their swept is $568,000. So their swept, if you have an excess swept community in your district, you'll notice this. Their excess swept is $179,000. So they have $179,000 swept above and beyond the cost of inadequate education. I did a calculation to see if they're eligible for relief aid. To be eligible for relief aid, no excess swept community is eligible for relief aid, because when I did the calculation for the relief aid, it turns out to be about $6,000. So it would have to be a lot more than $6,000. It would have to be, their relief aid grant would have to be greater than their excess swept for them to be eligible for this. So currently no excess swept town is eligible for relief aid. Let's see. So their preliminary grant is $0 because we don't need to pay them an adequacy grant because their swept is greater than their adequacy by $179,000. But let's look at the swept reduction. Under the old swept regime, their swept was collecting $785,000, but now they're only collecting $568,000. So if we do the math there, it looks like they're receiving a reduction in funding of $217,000. But the way the law is designed is they will not receive a reduction in funding. So they're not going to go from being a community that only receives $500,000 for their school, $568,000 for their school, goes from receiving $785,000 down to $568,000. We're going to pay them $217,000 to bring them back up to what their normal funding levels are for their community. So that is the swept hold harmless grant. So that's how that works. And if you're curious, and you want to do an analysis for your community, you want to know how much swept tax cut your community has, just like I did this for Bridgewater, you could do this for Londonderry as well. So Londonderry was paying 7.3 million for their swept, but now let's see, look at the new amount. It's $2 million. So if you want to subtract this from this, that will tell you how much tax cut that particular community is getting in swept. So Londonderry is getting a tax cut of $2 million. So you can do that calculation yourself. If citizens are asking you for that analysis, you can do that. That's basically the spreadsheet. I was going to do Alton. Alton's a weird community. Alton is, I'll do Alton really quickly. This is the half excess swept, half non-excess swept. Let's see. Their cost of inadequate education is 2.693. Their new swept is now 2,686,000. That's not much of a difference. So we need to pay them $7,000 to bring them up to their cost of inadequate education. Plus they get a relief aid grant. That brings them up to a $43,000 adequacy grant, but that only brings them up to 2.7 million. If we look at their old swept, it was 3.7 million. So we need to bring them all the way up, back up to that 3.7 million. So we got to pay them $983,000. So they have a net neutral impact to their funding due to the swept decrease. So that's basically the spreadsheet. I think the key takeaway for definitely the BAs on the call is this is your adequacy grant column. This is where we combined your adequacy grant and your swept. So this is your total state funding because the swept is a state grant. This is what you're going to plug in for your budget for adequacy. What you can plug in your budget for swept is going to be located over here. So I'm going to stop sharing. See if we have any questions. Okay, Nathan, yes. So I don't know if I should pick on Portsmouth, but I did explain it briefly. It is a little technical, but basically what I don't have it built into the formula of the spreadsheet, but what I did do the analysis for Portsmouth, I did the analysis for all the communities. And in order for like a community like Portsmouth to be, let's see what Portsmouth's FNR is.
You may have answered it, Mark, with your example of Alton, because I was reading it as always been excess swept, not going to be eligible, but in fiscal 23, we're no longer excess swept because of the reduction in the swept. So that may be my answer. Now that you explained Alton, I think that's where I fall.
And this formula, and that's why we wanted to have this training, because Portsmouth is used to being an excess swept town. So communities like yours, you're going to be receiving an adequacy grant, and it's going to be a little different for some people. You're going to receiving a check from the state. You're going to have to put it in the correct account code. So a lot of communities have not received a check for a while. We'll receive a check from the state. So yeah, definitely the formula is changing. That's a good question. Good to think about that stuff.
Thank you.
But yeah, as far as the relief aid, I did the analysis for each community and said, basically, the relief aid grant has to be greater than your excess swept, and then you would receive the net of that. But I didn't want to have it mess with the formula because I saw that no one is eligible, because it's going to change the proration of the grant. So currently no one is eligible. We'll do the math if anyone ends up becoming eligible the next time we do this calculation. So any other questions? Let me run through my learning objectives to make sure I hit them all. I think that was it. I wanted to show you where the two sweps are in the spreadsheet, show you where the adequacy grant is. Any other questions about the 23 formula? Well, thanks everyone for attending. We'll send out, I don't know when we'll send it out, but we'll send out the PowerPoints. And we'll try to, we have to, I don't know exactly how we'll send the video file out, but we'll get a video file to you at some point. And if you have any questions, of course, contact me. Thank you, everyone.